So, guys, session high, about 272 off of that, just a touch. Let's get to Bob Pisani this morning. Hey, Bob.
Good morning, Carl. Happy Tuesday, everybody. So this is it. This is Yellen's go big rally. That's essentially what's going on here. I think the market's concern is there's a big difference between a $1 trillion stimulus, which is what they're looking for, and a $1 trillion stimulus, which is what some people are saying they're going to have to compromise at. That's a pretty large difference here. If there's anything the Federal Reserve has learned since the 2008 financial crisis is go big rather than go small. I think many people wanted to do even more in 2008 after they saw the results, and if anything, wanted to be more aggressive. And so you're going to see Yellen really swing for the fences here. That's what the markets are anticipating. You see the moves here. Interesting to watch. Semiconductors generally outperform technology throughout the last several weeks. The retailers have just been doing great. The XRT, that's that retail index, it's near an historic high. It's done very well, equal weighted. Energy, oil's back towards 53. The pipeline news not hurting anybody there. Industrials have been modest outperformers, but not great on the year. Consumer staples and other defensive have been lagging all throughout 2021, lagging again today. 4-1 advancing the declining stocks, though. Nice start. We're right near a new high. What do we need? What does the market need to keep going? Well, obviously, a larger stimulus package. That's the main issue. But the bigger vaccine rollout, there's a lot of concerns about that variants that are out there, particularly in South America. Got a lot of notes about that over the weekend. But I think the two big things in the last week, a manageable rise in rates, a lot of talk about we got to avoid the taper tantrum in 2013, all the stuff that happened back then, got to avoid that. Manageable rise in rates, and then, of course, higher earnings. There's a lot of people who are very, very hopeful about the Q4 and the Q1 and Q2 guidance. So far, the numbers are good. It's really too early, but here's the story. 2019 was great, historic high. 2020, we've dropped 25% in the earnings numbers, and they're expecting it all to come back at another historic high in 2021 at $167. But those numbers, that's 22 and a half times forward earnings right now. We've got to get those numbers up. And a lot of people are saying they're going to come up. Goldman Sachs thinks they're too low. Jonathan Golub over at Credit Suisse is saying he thinks the numbers are too low. Well, maybe. Q3, they were right. Q4, we'll see. They've got to get better guidance, though. So this quarter is not really about, this earnings season is not about the fourth quarter. It's about companies being more confident about the first and the second quarters. Meantime, isn't it nice to see some of these old school market stocks that we gave up on kind of come back? Look at General Motors today. You heard Phil talking about what was going on there with the Cruise announcement with Microsoft. They had several upgrades recently, and Exxon has been doing much better here. They had 2 upgrades last week. I don't know if the dividend is safe. JP Morgan says it is, but people are starting to act like that. And all these retailers like Best Buy and Tapestry, the old Coach, that's a 2-year high for them. Nice to see the old school doing a little bit better. Meantime, it's really on the broader markets. It's very clear what's going on here. We've got energy stocks leading, any kind of energy stocks leading, clean energy, fossil fuels leading, and commodities. That's the Goldman Sachs Commodity Index, and small caps. Those are the things moving the market. There's your stimulus play right there. The laggards are, well, gold, long-term bonds, defensive names like consumer technology, consumer staples, and tech is leading a little because FANG's been weak overall. David, the fund manager survey, it's very clear what they're concerned about. They're worried about a steeper yield curve and higher inflation as an issue out there, but the two big issues there, peak growth on vaccine and peak liquidity on stimulus. I think they're a little early to be worried about that, but obviously those are second half worries.
Shepard Smith here. Thanks for watching CNBC on YouTube.